Good morning. Good morning. How is everyone? Welcome to this live show. Welcome once again to this live stream. This is the trading cyborg. This is the trading cyborg. So at least I have one viewer now. We can begin. So this week, we first begin this week by analyzing the Forex Factory. So we want to see what Forex Factory has in store for us this week. It seems we have begun the upward move. So today we have JPY new. We have JPY holiday. We have JPY holiday, and we also have the Chinese holiday. So this is a Chinese holiday. CNY is Chinese. Tomorrow you don't have any news. We don't have any USD news. So our news begins on So we shall have news only on our news is from Wednesday. Now coming to our charts, we shall start with the 1 month analysis. So looking at our monthly candle, we can see that liquidity still exists at the top. Around 703 pips. So all this is liquidity. And this is in the monthly time frame. So we have liquidity to the buy side. So this is all called buy side liquidity. So liquidity 1, liquidity 2, liquidity 3. And by liquidity, I simply mean price has a more chance of getting to this level than it has a chance of getting to this downward level here. So price has a more chance to go on the buy side than on the sell side based on our candles. Okay? So buy side liquidity, sell side liquidity applies everywhere. And its meaning is simple. The meaning is simple, very simple. Where does price have a more probability of going in the long run compared to both buy side and sell side? So in our case, since price is near these levels, it is far much easier for price to get to these levels than for price to even get to this level here. Okay? It is not that we are negating these downward levels. Let me also mark them. So it is not that I am negating these levels, these downside levels. No. So down here we have sell side liquidity, and then here we have buy side liquidity. So that is the monthly time frame. When we go to the weekly time frame, so in the monthly and in the weekly time frame, we are looking at the price, the direction of price based on the printing of the candles. So now we are in the weekly time frame of GBP USD. So looking at the monthly weekly time frame, we can see two things. We shall mark these two lows here, this high here, and this low here. With those two lows there, when we take out our fib to get a sweet spot level, this is what we get. So this level here, which I've marked here with this triangle, this is a weekly sweet spot level. Okay, so that's a weekly sweet spot level. Weekly. Now when we go to the monthly one once again, we can see that our weekly sweet spot level, on our weekly sweet spot level, you can see that we have a very clear FVG. So we have two. We have a monthly fair value gap. We also have a monthly inversion fair value gap. But let me not cover about the monthly inversion fair value gap for now. We have also a weekly sweet spot level. So if I zoom in, I hope you can clearly see this. On the monthly time frame, if you're on your screen, we have a sweet spot level, and we also have a monthly fair value gap, which is yet to be filled. So in my analysis, or what I am anticipating for this week, is simple. I would wish to see price, that is my monthly anticipation, that I would wish to see price come and tap this level, and then maybe it is going to now start the journey to the top. So this is what I maybe expect. So we first take out that liquidity there, then we come to this level, then we go to these other levels here. Okay, so up to that point, what we are discussing is our we are trying to get a weekly projection. We are also trying to get a monthly projection. So this is a routine for the week where we try to anticipate what price is going to do maybe in this coming week. After all, this is the last week of February. Before now we get into March. This is the last week. But don't forget, I've told you that majority of liquidity is up here and up here and up here. So the action of price coming to these levels is just seeking more liquidity. So once we go to the daily time frame, okay, so that is what I expect to see this week. That is exactly what I expect to see this week. So we began on the we call them cells on this cell journey last week on date 16. So in my previous analysis I thought that price, or based on my analysis, I thought that this level here, which is indicated as the sweet spot level, was the level which price was going to get to and then do what? Turn around and start buying. But that was not the case, because price ended up coming and invalidating this level. Okay, and because now when it comes to the daily, to the 4-hour time frame, it is clearly evident that price has closed above this 4-hour significant OB, and that should indicate a buy. So when I extend that line like that, so this will be our 4-hour retest of the mitigation block. So I've just extended this line to this level. So from this level, I extend this line all the way outward, so that if price is able to come to this point, then it can maybe tag us in. And also, there is a fair value gap here. The 4-hour fair value gap around that level here. So now, let us try to simplify this. On the 1 month, there's potential for more sales. Okay, as we have seen, that is on the 1 month time frame. 1 month time frame. There is potential for more sales. In the weekly time frame, so what are we seeing in the weekly time frame? Let me see here. And then in the 4-hour time frame, we have seen price breaking 4-hour bearish order block. And then in the 1 hour, so now what happens with those analyses, those different analyses? Because there are two bones of contention. is price going to go lower or is it going to go higher? Okay, now it is during these such instances when I don't have 100% conviction in what price is doing that I like to wait for more info. It may seem counterintuitive. That is, it may seem like a waste of time waiting for more information, but in the end, it saves you money and it saves you mental capital. And whereas money is easy to recover, mental capital is not. Okay, so it is better to expound my mental energy where I can see potential for price to do well. Because the higher time frame is showing a sell. Now when I draw my fib from last week's high of Wednesday and this week's low and last week's high of Friday, which is a very okay, these are significant highs. We call them intermediate highs. And then this one is the last week's low. So currently you have a sweet spot here. That is, if you are going to sell, this will be the ideal level of selling. So now, at least now I have a clue of what I want to see now. Okay, I have a clue now. I have gotten a clue of what I would like to see, because it is not that hard. Once you start analyzing, we have been analyzing for around 38 minutes, so now at least we are not in the dark. So this is what I would like to see. This is what I would like to see. If price breaks above this sell sweet spot zone, then I have no business considering a buy. Okay, if price breaks my my sell sweet spot zone, oh my god, those are so many words with the same letters, so many words with the same letter. My sell sweet spot zone, and to get my sell sweet spot zone, I have taken this intermediate high and this intermediate low, because in the higher time frame we can see a potential for more sales, while in the higher time frame, in the lower time frames, from the daily and the weekly, no, from the 4 hour, you can see that price is changing direction. So we have two conflicting beliefs. The first one is price has more potential for a sell. The second one is we have changed momentum and we are going upwards now. So which is which, and what do we follow? Okay, these are the dilemmas we face on a daily basis as traders. They are called ethical dilemmas. What do we do now? Okay, of course, the best of the best decisions is usually to keep off until we get more information. But now we have an even better way of maybe getting a signal. But as you know, the best signal is the one which is easy to get, not the one you have to look for the whole day. So if we have to waste our time trying to deduce where the market is going, then it means that day we should not be taking any trades. Okay, just like we have not taken any trades right now. So my bias for GBP USD is, if we are able to see price shoot above our intended sweet spot level, then by all means we are going to be buying. If price is not able to hold this sweet spot level, then by all means we will be looking for sell entries. So as at now, the only thing you can do for yourself and your money is to be patient a bit. Just be patient. It does not cost you nothing to be patient. Okay? It costs you nothing to be patient. So this is the dilemma we all have as traders. It's a daily dilemma. It never gets easier. But once your self-control becomes more strong than your emotions, you'll find it easier not to take necessary trades. Because on very many days, we don't need to be trading at all. At all. Very many days, we don't need to be taking any trade. Yet, in a situation like this, you'll find that many people are taking unnecessary trades. Okay? So actually, if you are listening to me right now, how many are listening to me? Okay, we have 2 here. So, we can even decide to wait. We can decide to wait and let price give us the direction. Because now, if I decide to get in right now, okay, you are watching me getting right now. I have told you right now easily that I'm in an ethical dilemma. The higher time frame has potentials for a sell. The lower time frame, that is the 4-hour time frame, you know, compared to the monthly time frame, the 4-hour time frame is still a lower time frame. So compared to the 4-hour time frame, clearly you can see price here has done what? Has broken above. And this indicates that we should be buying. But still, is this an enough indicator for us to go higher? Okay? Which brings me now to my what? To my conclusion that once price is able to break above these sweet spot zones, see this is a sweet spot zone. Once you take this intermediate high and then you take this low here, the fib will produce a sell sweet spot zone. So if price is unable to hold that sweet spot zone by the end of today, it means tomorrow we should not hesitate to be looking for buys. Similarly, if price is able so using this fib, what I can do immediately is draw the parameters. I draw the parameters like that. So if price is able to go above, now we have a distinct line. So if price is able to go above this line, this distinct line, and go above and close above it, in all fairness, that will be a buy, at least. But at the current level, if price decides to move downwards, that will be, for me, a correct move, because in the higher time frame, we can see sells. In the lower time frame, we can see buys which are not very convincing. God damn. Imagine taking 1 hour to explain one thing. So we wait. Now on US30, so for GBP USD we have said we wait. And remember, as traders, it is easier to get into a trade, but managing that trade psychologically is not as easy as it seems, especially if you are not very confident about that trade. If you are not confident about taking that trade, it is going to be very hard to manage that trade mentally. You will find yourself getting out even after 20 minutes, or even after 1 minute, or even after 5, or even after 30 minutes. You are out. So for US30, if you have been following my analysis, is that I was also anticipating for a buy. Why? Now once we draw our fib, this is our fib. So using our fib, we have taken the low of February and the high of February. So this is what we call our CBDC. So everybody say CBDC. So what is CBDC? What is CBDC? So CBDC is simply the central bank dealers range. So when we are learning this strategy, or when I was learning this system, the mentor said, or the mentor told us that we have specific levels which central banks operate every week, and those specific levels are determined by previous highs and lows. So for example, in our case, our CBDC, we have taken this month's low, so February's low, and I've taken February low because if you condense this even further, you can see that these lows, 1, 2, these are very serious lows. So we take the February low, and then we take this high here, because this high has not been, price has not touched this level, and also price has not come to break this level, so it's a very significant level. So between these two levels, this is the level we call the central bank dealers range. So we assume that is where the central bank is going to either short or go long. Now when we place our fib, our sweet spot level is at this line which has been outlined here. Okay? Now from last week, I don't know when, from a very long time ago. Is it last week or when is it? So for some time now, I have been trying to buy USDT. But then, I don't know what has been happening. But USDT has not been responding the way it should be responding. That is buying without any problems. So, unless it wants us to get here, because once it breaks these lows here, once it is able to break these lows, then for sure I'll have to change my opinion so that we can come to this level here. Okay? So for USDT, the decision is wait until 4:30. We see how price is going to behave, because if it is able to break this level, because I cannot explain to you why we have stayed for 1, 2, 3, 4, 5, 6 days consolidating. Why? You see, that seems very suspicious on the price, on the side of price. So when something is suspicious, when I don't have confidence, I don't have more information, I wait. So USDT, my bias is still a buy. Okay, don't get confused by that. As opposed to GBP USDT, I am a bit more confident of a buy. Why? Because price has not yet, even if price has been consolidating for the past 6 days, at least price has not broken that level, and it has not yet invalidated that level at all. So that means the bias is still right. We just have to see price moving. Okay, the only way we shall invalidate my bias of a buy is when we sell. When we sell and we close below these significant lows. So we have 1, 2, 3, 4. So that is the only way we shall accept to be sellers. But before then, we shall wait for 4:30 and look for opportunities in the buy direction. Okay? So all this planning we are doing right now on Monday 23 is what is going to carry us across the week. Across the whole week, this is what is going to carry us. So a simple indicator like price breaking below a certain point, that is enough information for us to act on. Okay, so when you turn on GBP USD, price is still doing what? Price is still hovering around this level. So GBP USD, I will only buy maybe when I see price has broken this level. And sell, I don't know how I'm going to sell GBP. I don't know, because I cannot see any support, any clear support, and any relevant area of interest I can use to anchor my buy or sell position on. So for GBP USD, I'll be waiting for it to break a sell sweet spot zone. At least that will give me a confidence, because we all need confidence when taking trades. I need a lot of confidence when I'm going into that trade, that even if I am taken out, I will not feel guilty. So price is currently reacting to that sell sweet spot zone. But is that confirmation enough for me to get in? No, 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 please. No, 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 no. I refuse. So the only logical move I have right now is to genuinely wait, because at the end of the day, you don't want to be in a trade which you don't feel confident about. You need to be very confident about the type of trades you are taking. So you have heard my reasoning. You have heard what I'm waiting for from those two pairs. Maybe we can look at gold. So we have gold there. So I hope everybody can see gold. Everyone. So on gold, everyone including a toddler knows that gold is on an upward trajectory. Gold is on an upward trajectory. Everyone knows that, everyone understands that. Simple and clear. Now what the only issue is where to get in on gold. Okay? We have more liquidity up on gold here than we can ever have. In fact, we have more pips on gold waiting for us combined. When you combine all currencies, gold has a lot. For example, these are 4,908 pips. Just waiting for you. So my view on gold is very simple. In fact, this one I can even add something called an alert. Not that I'm going to trade it unless it has very serious 5093.42. Surprisingly, between these 2 points, we have a very clean fair value gap. In fact, it's a 4-hour FVG. It's a 4-hour FVG. That is the best as I can tell you it is going to be. That is the best way There's no other best way. This is the best way we can get in on a buy. That is the best way, by the way. There's no other best way for gold. Because if you know gold, you know that if you joke around this week, this whole week, this simple week here, this simple week here can destroy your account in a minute. In a minute. In a minute, this simple week. So the best thing is to always remember one thing. Only A setups for gold. Number 2, strict risk management for gold. It is not just saying strict management. Yeah, it has to be strict risk management on gold. So let me post this on the Telegram, so that when they win, they will know that I was also winning, and when they lose, I will tell them then the market is what made me lose. So we are going to wait until price gets to that level, and then for GBP USD, Alright, so GBP USD is currently reacting to that level, which makes me think one thing. Maybe it was just coming to create a high of the day and then sell, right? Because as we said, it is reacting off this sell sweet spot zone. This sell sweet spot zone is what price was reacting to, because it has refused to close above, and now we can see we are seeing something like a smooth run. But the problem is, this fair value gaps here, or this price action here before London session, is not very clean. So it cannot help us. It cannot help us in our quest for getting in for a buy. So right now I'm hands off during the London session. It does not mean that I'll continue to be hands off for the whole week or the whole day. No. If a good setup comes during the New York session, then I'm going to get in. If you don't have a good trade, so first of all, for GBP USD, I'm not trying to get into any trade until I see price has broken this sell sweet spot level. Okay, because if I am able to see price close above, then I'm going to have the confidence to even hold. Because the only problem is usually confidence. That is why most new traders make a lot of money and then they lose it all. Why? Because that they have that delusional confidence. Is it delusional or is it irrational? Irrational confidence that they are going to win and they will never lose. That is usually the problem with being a newbie. But when you're experienced, your confidence is no longer delusional confidence. It is responsible confidence. You have responsible confidence. Okay? Or healthy confidence. Part of healthy confidence is having what we call healthy fear. We have what we call healthy fear. Healthy fear is when you abstain from taking very many trades because they don't match your criteria. Okay? And it is good because you have serious reasons as to why you are not getting into that trade. But now, foolish fear is when price breaks above this level and I'm still hesitating for nothing. So this week, we have only one agenda: to follow the trend, and to follow the trend as best as we can, and to focus on what really matters, because what matters here is not even knowing the direction. You can be right even without knowing the direction. For example, I may be right on a retracement, not necessarily the trend, but I may be right on the retracement move. But is that the right thing to do? No, because there is always absolutely no need to take trades which are going to make you change your plans. Okay, now we can check the CFTC a bit. Now, if you are watching this is going to be another very useful point for you. As of 17th, so this is 17th, as of 17th February 2026, that is last week. It is not last year, last week. So we are talking about things which have happened 1 week ago. The big boys or the hedge funds are putting more emphasis on shorts. So we have 122,075 shorts on GBP, and we have 83,000 longs on GBP. It even becomes more interesting. It is even more interesting now. Why? Why is it more interesting? Why? Can you guess why it is more interesting? Can you guess in your head before I even tell you why it is even more interesting? Guess, just guess. Just take a guess. Just guess. Guess. So I'm giving you only 5 seconds. 1, 2, 3, 4, 5. If you have not guessed, then keep quiet, I tell you. Because it seems you don't know and you want to know. Now, the reason why it seems it is interesting to me is because when you look at the changes in the commitments from 10th February, we are seeing that hedge funds are adding more shorts, and they are even removing their long they are even removing their long positions. Why are they removing their long positions? What are they fearing? What are they fearing? Huh? Why are they afraid? I don't know why they are fearing so much. But they have removed 6,000 longs, and they have added more shorts. That's around 12,000. So in retrospect, or the simple way to explain this, so that it is not confusing at all, is that GBP on the fundamental level seems to be moving to the sell side. True. Very true. So I'm inclined to think that our sell sweet spot level is quite clear. Is our sweet spot level is strong, or is significant. Okay, because when we began the analysis, we said in the higher time frame, sell. The lower, not sell, a potential for more sales. In the lower time frame, potential for more sales. The daily time frame, potential for more sales. But when you drop now from the 4 hour, we can see that price is changing direction very quickly. But still, the fundamentals are showing us clearly that we are on a sell. So why would we not look for sales? Or even the better question would be, where would be the best place to get in for a sell? So with that information, my dear listeners, from wherever you are listening me from, as a trading cyborg, I would like to maintain my bias for a sell. A sell on GBP USD. Okay, so if price is able to break level 35,100, and maybe you are able to get good entries, then we should be looking at more sells. More sells. If you remember correctly, last week I tried to sell on Friday, but price never gave us an opportunity to go to short. So we never had an opportunity to go short, because in the long run, price ended up buying. So the whole of Friday, so now we have two plays here, or now we have two possible scenarios here. The first possible scenario, which I am waiting for, is if price breaks below 35 this level here. So we shall name this level our area of interest, or AOI. So that is called the area of interest. Everybody say area of interest. Area of interest. So that is our AOI for today. So we have two AOIs for GBP USD. The first AOI is level 35 1.35116. The second area of interest is above level 1.3538. And the reason we are doing this is that we don't want to get caught up in the middle where everyone is losing money. We want to be in a situation where once we place the sell order, immediately we are in profits. We don't even have to wait. Immediately we are in profits. Immediately when we blink like this, profits. So, and to save our mental capital, the best thing is to wait for those areas to get taken out. Then we get a a clean bias, a better bias, a good bias. Right? For US30 the same. There's no miracle here. The only miracle we are going to perform is when we are withdrawing the money. So when we are withdrawing that money, there is a lot of miracles. Those are a lot of miracles. By the way, the other, if you want, but I will not recommend this because this is a very huge stop loss. You could place your buy there, but then your buy will have to be covered. Will have to look like that. So these are around 374 points on US30. That is if you want to take an aggressive entry. But why take an aggressive entry while we can wait for New York session? So for gold, if price does not get to that 4-hour fair value gap, to come and retest our other significant levels, we call it the return to the mitigation block. So if price is able to return to a mitigation block, test it, and then give us a bullish candle, okay? By the way, the whole point of this 1.5 hour discussion is not to discuss technicals per se. What we are trying to do is get reasons to get into a trade. But those reasons have to be credible reasons, so that even when we are getting into that trade, we are confident. That is why we can go even for 3 days, 4 days without taking any trade. But when on the day we take a trade, we are confident about what we are doing. Now the problem sometimes with waiting is that sometimes you'll get voices which are going to make you force yourself and take that trade. Of course it is me who's taking that trade, but sometimes when you wait for too long, you get something called the fear of missing out. And if you're not careful, your fear of missing out is what is going to make you blow your account, your precious account, your hard-worked account, the account you took very many days, very many weeks to save for. That now you are going to blow that account in a few days because you are fearing missing out. Okay? So to remove that issue of wanting to be in the markets always, you have to actively work towards it. You just don't say that I am going to be patient. No. You have to actively fight the thoughts which are making you get into bad trades. Trades which are not planned for. Okay? So GBP, no, gold, this is our level here. I would genuinely wish to see gold get to this level first before I even decide to take a buy position. And GBP USD. That is exactly what we are waiting for. Exactly what we are waiting for. That price may return to our sweet spot level. So GBP USD seems to be responding to a sweet spot level very well. By the way, if it is able to break our area of interest, this level which has been marked AOI or area of interest, or you can call it point of interest. You can call it either area of interest or point of interest. It is just an English word I have made up. So, or we use as traders. So, if price is able to get to that level and break it, now we can comfortably look for sales. Let me prepare my wallet. All right. So you can see that if it is going to be a sell, we have our first level of liquidity to get to. So this is going to be our first level of liquidity. Price has refused to break that level totally. So it's just a matter of patience, a bit of patience. And you see, taking trades does not have to be very hard. Okay? You don't have to have it so hard. So price has refused to break our area of interest. It has totally refused to get in a... Now imagine if I had gotten in right now. Imagine if I had gotten in right now. That is why it is always good to wait for price. If price wants to, if we want to get in, we wait a bit like that, and then because remember this is a 5. We are getting our confirmation from a 5 minutes time frame. For a more refined entry, we are looking it in the 5 minutes time frame. We have done all our analysis in the higher time frame, but to get a better and a refined entry, we are doing that in the lower time frame. So what I wish to see is price going below our area of interest and us looking for an opportunity to get in. So when we get that retracement, we will still be here and saying this is the retracement, this is how we want to handle things, this is how we shall handle this trade now. But before then, we will not risk our money on something we are not very, very sure about. So we patiently wait for what price has in store for us. Now, what if it keeps hovering, or what if it keeps playing around that level? What do we do now? What do we do? Because if price keeps on playing around like this, what do we do? We also keep on playing. If price plays the games, you also play the game until one of you gives in. Now those people who blow their accounts give in very quickly. If you give in, if you give in to bad price action, then how will you blame the market, my dear friends? So what we are having right now is slow price action. Slow price action, and having slow price action is not a problem, because 80% of the time the market is not moving. 80%. In fact, in a whole week, we only expect 2 moves. 80% of the time we are only expecting the markets not to be moving. But 20% of the time is when we are in that trade. And when that trade avails itself, it will not be right for us to hesitate taking it. So a reminder, we are waiting for price to break our sweet spot level, specifically this this blue line here, or for price to break this area of interest below here. So once it breaks, for those who don't understand, so once it breaks above this blue line, we shall get in on a buy. We shall wait for a retest, we get in on a buy. Once it breaks below this level, we shall wait for a 5-minute retest and get in on a sell. But my overall bias as trading cyborg is that we have more potential to the downside first. We have more potential to the downside first. We go and fill the fair value gaps. We go and fill the fair value gaps in the monthly time frame and the weekly time frame, after which we can now start looking for long-term potential buys on GBP USD. Okay, so that is my thinking as of now. But remember, my thinking does not affect the market, because the market will do what the market wants to do, and my work is to react to the information I'm given daily. So right now I am reacting to the information which I am getting right now. So maybe as we wait for price to close below, maybe you can tell me what is your issue in trading, and I can try to help you the best way I know how. You can type your issue down there, then we can try to deliberate on your issue. So most of the Mondays I make money, but this Monday is moving quite slow. But we shall not relent. We shall be back again. We shall be back during the New York session. So it seems like that price is breaking that level. So let me enlarge it for you to see. Now, being on a Monday, I'm just anticipating maybe 20, 30 pips. So we are closing below price is trying to close below but it is facing a lot of resistance. So we are 10 minutes to 12, but I'm not yet in of that trade because you can see that price is having a very hard time breaking that level. As Mr. Korea, we are locked in, man. We are locked in. So we are waiting for price. We are waiting for price to break below 35.13, which is our area of interest. Then maybe give us a retest, and then we can sell. So it's a very slow process, but it saves us a lot of money. For example, now we have been waiting for almost 2 hours for that break and retest. 2 good hours. But you know, it is better to wait for that break and retest rather than get caught up in a bad trade which is going to consume all our mental capital. All our mental capital. Traders, if you are listening to me, it is not my wish to wait for so long, but waiting for this long is what has kept me in the game for long. I wish I could go in. I wish I had that irrational confidence I was talking about earlier. But irrational confidence is equals to foolish confidence. Healthy confidence is equals to more money in your pocket. Okay, that is why we set alerts. That is why we wait for price to do this. That is why we wait for very many things. Okay, so price seems to be closing below. If you're on your charts, price seems to be closing below right now. So we shall just wait for that candle to close before we usher in the other candle. So it's already 11:51. We shall just wait for price for the candle to close below. We shall wait for the 1 hour candle. So this 1 hour candle here. So this is the 1 hour candle we are waiting to close below. So my belief or my view is that it is better to waste 15 pips and then save myself a lot of money and then get more confidence to add more lots rather than getting irrationally and then my mind starts moving with anxiety, because what I'm trying to avoid here simply is anxiety. When I'm in that trade, I don't want to be anxious. In fact, there's a point I know you forgot. I told you that even if I am taken out of a trade which I was very confident in, funny enough, there is usually no effect on my emotions. But if I get in on a trade which I know clearly that I have gotten in early, there were no confirmations, it pains me because I know I should not have lost that money. And I should not have lost that money to my impulses. Okay? So that is something the market is usually telling me. That my impulses should not be stronger than my self-control. And that is what I have been trying to practice on these live sessions. So these live sessions are not only for you, they are also for me, trading cyborg. Right? So it seems price has totally refused to break that level. And so we will continue to play that game. I told you, you don't run away from the game. You play the game. You become more pittier. You become pity. And by becoming pity is not engaging the markets. In fact, becoming pity is keeping your hands to yourself. You tell yourself, let us see and wait and see where this price is going to take us. Okay? Because maybe it wants to try something new we have never seen. And for us, we are just onlookers. We wait and see what is that new that price is trying to do. Okay? After all, we are here to make money. We are here to make money the easiest way possible. And we don't have stress. Okay? So, I know it is easier said than done, waiting for a trade. But once you start practicing it, once you practice it, you'll find out and you'll realize that it is quite easy. It is quite easy. So we have 5 more minutes to go to the top of the hour. That is 12 a.m. 12 p.m. Sorry. 12 p.m. My God. The real trading is quite boring. Very boring. I wish we could be doing something like maybe typing when we are waiting for that trade. But no, we are cast to just keep our hands to ourselves. Just staying like that. Why? I know it is part of the job, but sometimes it will be. I wish it will be a bit more exciting. That maybe we are doing some typing. The only thing which makes me happy is because now I'm talking to you. At least now I don't feel bored. What? So price has refused to break that level completely, and I have no idea what it wants to do. So if I could have gotten in, using an aggressive entry, right now I would be in complete losses. Now we are almost to the end of our, what do we call this? We are almost ending our live session, but I want you to check something. I hope you have taken something from this live session, that Trading Cyborg wanted to get into a trade, but the market was not responding to his areas of interest, which are level 35, 100, and the upper level, which is the sweet spot level. Now, it is not to mean that I don't want to take trades. What it means is that I love my money. I love my money, and by loving my money, I should endeavor every time to take care of it. So a reminder that yes, the long-term bias for GBP/USD, according to me, is a buy, but the higher time frames are signaling that we may have more potential to the downwards. So what I am seeking to do, or what I would wish for price to do, is simple. Go to the lower time frames, or go to those higher time frame areas of interest, that is the fair value gaps. Fill the fair value gaps, give us a concrete low, then we can go to the moon. We can shoot to the moon now. We can shoot to the moon. So those 2 hours have been very uneventful. So I don't know why. Today price action is very quite slow. But we don't have to take any trades because we are here to protect our money. I have decided to follow Jesus. So what we will do, because I don't see myself taking any trade right now. I don't. So what I would want us to do is simple. Wait for price to break below our level. Not just this area of interest here. Even this level here, if it breaks this level, then we get another new bias. Okay? Before then we don't take any trades, because it is going to be counterintuitive to ourselves and to our systems. Now, so ladies and gentlemen, we are going now into the third hour since we began this streaming. You yourself has seen that our trades are not forthcoming. Volatility is quite low during the London session. So the best thing we can do for ourselves and for our money is to be patient until we get to the New York session. When we get to the New York session, probably we shall have better information which will allow us to get in. But before then, we don't engage. So maybe I can give this trade 10 more minutes for it to break this level. But if it does not break this level, So 2 hours we have given price an opportunity to sell. But still we are in that level also. So we are still in that level, on that level. So the best thing we can do for ourselves right now is take a break and then we come back later. So thank you for all those people who have been with me for the 14 minutes. I believe, or I hope, that by London, by New York session, we'll be somewhere. So thank you for your time. I hope you have not taken any trades. Let us meet during the New York session to continue deliberating on these trades. So thank you once again, and I hope to see you in the New York session. Have a lovely day.